Yes, and we're live. Hey everyone, Scott Solari. Welcome back to the Finance of America Mortgage Professional Hangout. And I work with viral marketing in Finance of America here. And I am with William Brown. Very excited to interview William and talk about, making money with renovation loans. So, William, why don't you give the audience, I mean, I'm sure most people know you, but why don't you give them a little bit background about what, your division does and what you're working on right now.
Okay, so hi everybody, and thanks for taking time to talk to us. My division is really responsible for the customer experience for any kind of renovation or construction loan that our salespeople would originate. So we do that by having a self-contained operations unit. So we're separate. We're a whole separate division. All we manage from origination through funding and then escrow management are renovation loans. And what that does for the salespeople is gives them a really robust back office that they can have clear communication, clear guidance from, and a proven process that lets us manage the loans and get them through to closing in a reasonable amount of time. And then for realtors, what it does is give you a single point of contact besides your loan officer for accurate, timely information. So we manage kind of all the communications once the contract is signed and it gets disclosed and it's handed off to us. Then we manage the borrower communication, helping them get their contractor, determining what kind of loan it is. If they need a HUD consultant, we set that up. And then we'll underwrite it up front, so that which is really powerful for you as a realtor, because shortly after the contract is signed, you have your conditional commitment from the underwriter. So we've underwritten according to the numbers, and that gives us the rest of the contract time to get the rest of the details together, instead of pushing everything to the back end and underwriting 3 or 4 weeks after the contract is executed, and then finding out, well, the borrower has credit issues. So we get that out of the way in the front end, and that helps a lot. And then we can basically communicate with all the realtors. Most realtors that work with us, in other places where I've been doing this way for about 7 years, and we generally become the preferred shop for realtors who want to, sell properties that need rehab or updating or modernization.
So I want to ask you, because I know you kind of went over it, but how big, how huge is this for your LOs that work with Finance of America to have a department like yours specifically dedicated to this? Because I know most mortgage businesses out there don't have this, and that's kind of why there's a hesitation with a lot of loan officers, because they have to do all this stuff themselves and it ends up getting messed up potentially. How big is it? I mean, like the things you just went over.
I think it's really huge, and I tell salespeople every time, if I wasn't doing what I'm doing, I would be back originating. As long as I had a back office like what I have, then I would sell these all day long. There's a huge market for a renovation loan. There's a housing shortage almost in every metropolitan area. There's not enough houses, especially for first-time home buyers or move-up borrowers. But there's lots of houses that can be renovated or updated. And so from the sales side, and what we get from our salespeople is they just like it. We are basically, in my group, we're customer service professionals who happen to be working in the mortgage business. So I've got 3 main customers. I got the borrower, I got the loan officer, and I got the realtor. Those are my main customers. And so we designed a process to address the needs of each of those people, so that when they're working with us, they're not feeling like they're hung out or left in the dark or overwhelmed or have more stuff to do than they can manage. So from the sales perspective, yeah, I think it's just really huge.
Yeah, absolutely. So I know that, LOs just want to hear about, how they can get in front of more top realtors in their market and add value. But before we go there, I want to talk about first about the benefit for the LO and the benefit really for the borrower, the buyer, and how the LO can position himself to working with more potential buyers or borrowers.
Okay, so I think from the LO's perspective, really it lets them be in more of a role of a financial consultant in a way. So recognizing that the home purchase is arguably probably the largest single purchase that most Americans make, and some people only do it once or twice, 3 times in their life, and each time it's the big purchase. And so if they're talking to one of our LOs who is actually paying attention to what I'm trying to tell them, which is that the borrower is going to go spend money fixing up their house after it closes. So he's going to spend anywhere statistically $10,000 to $20,000 fixing up the house after it closes. So why don't you put that in your mortgage at today's mortgage rates and keep your cash? Don't liquidate your 401k. Don't borrow money from your parents or your brothers or sisters. It's inside your mortgage. So that is huge help for the consumer because it positions them for their next step. So if it's a first-time home buyer and they're buying a first-time home buyer sized home, anticipating they're going to grow their family or whatever, their career, and they're going to move in 5 to 7 years, they're going to close their loan generally with equity. And it's going to be all the things that they would spend money on. The majority of them will be in their mortgage. So it minimizes their out-of-pocket expenses, getting their house customized to be their home because we put it in the mortgage. And so they get to do that, you do something else with that cash. And the other thing it does for the borrower is it really lets them pick where they want to live.
Yeah.
So I don't know if we're going to cover this later. So I'm getting ahead.
Let's go down that road because I think that's one of the biggest things. I mean, the two things you just mentioned cause the buyer so much anxiety is, having to come out of pocket so much money. I mean, they're already having to come out of pocket probably for a down payment potentially. Now they have to do more after the fact to clean up the house or make it look the way they want it to look. But the second thing, what you just mentioned, location, I mean, that's so big because people want to be able to pick where they live. And if the perfect house isn't available, then they have to go somewhere else. So talk about that. Talk about the location, and how important that is.
What I believe and what I've seen I've been doing these loans for about 13 years. For 7 years, I was selling them, and then about 14 years now, I guess, because I've been running a program for 7 years. Really what you can help your borrower do is just answer the question, where do you want to live? And if it's in this town, then we're looking for a residential structure in that part of town. And we don't really care about the condition of it, pretty much. Because if you can afford to live in that part of town, buy a move-in ready house, then you can also afford to buy one that's less than move-in ready and use the same amount of money you would have borrowed for the purchase to pay for the renovations and take this house and really make it your home from the beginning. Right? And so it's really a matter of, and for realtors, it's a matter of asking your borrowers, where do you want to live? And then looking for houses there as opposed to what kind of house are you looking for? Is it a ranch? And I might be really particular about a ranch, but I've talked to a lot of consumers and they really want to live in this area because of the parks or the schools or the proximity to shopping or the easy access to highways or airport, whatever their need is. So it's a little different than find their ideal home, which is to focus on location. We'll get the structure, and then we can renovate it and fix it up and do whatever the house needs to really make it their home. So it lets them customize their choice and their home, the building.
So let's say a buyer finds a house in the location that they want. How do you go through the process ahead of time on saying, like, you have a contractor go out and go, all right, it's probably like the estimate is going to be, we can put in $30,000 into this renovation. Do they know ahead of time? Like, how does that process work at the beginning?
So ideally, we're just working on the numbers. That's a financial trend. So ideally, their loan officer has determined where they want their payment to be, what that dollar amount is. And say I want my payment to be $400,000, and that's the most I want to spend. Then ideally, their loan officer would have prepped them and said, okay, William, if you want your mortgage to be $400,000, you should be shopping in the $280 to $350 range in the neighborhood where you want to live. And then the balance of what's left over is available for renovations. And so, because if we bring in a contractor to get the bid before they've written their offer, it just slows down the real estate transaction process a lot.
Right.
So, as long as they're reasonably confident that if I write my offer for $310,000, I basically have $90,000 to fix up the house. If I write it for $350,000, I've got $50,000, right? So you don't have to worry so much about those details at the beginning. You can find the house, focus on getting your purchase agreement accepted, and then after your file's underwritten and you're credit approved, then we would engage whichever level of contractor with you to get that done. And it just keeps the process going smoothly. We generally are closing within the confines of a typical real estate transaction, 45 to 60 days. Maybe a little bit longer. I think our average right now of all the loans we've closed since we started this in January is 52 days for tiny loans with renovations, and then loans with $100,000, $200,000 renovations.
Yeah, which is a normal average time. I mean, that's pretty average, right? So, and then real quick for the viewers that are watching right now, there is a little box up on the right that you can click in, and there's an application that says Q&A. Feel free to ask questions to William while we're going through this presentation today. So, William, talk to me a little bit more now about the benefit for the loan officer to be able to present this value to not only the realtors they already work with, but to potential prospective realtors that they want to be working with.
Okay. So every realtor, they're in the business to sell houses, right? And so,
yeah.
and there's lots of loan officers, and they usually have their loan officers. But most realtors don't have a loan officer with a solid back office for the hard deals, for the renovation deals. People call them hard, right? Historically, people sell around them. Realtors and loan officers sell around renovation loans because they don't have the support they need to get the deal done. So our loan officers are able to approach pretty much any broker in the country and offer them, the opportunity to close the deal sooner, maybe to take some of their expired listings and get them off their expired listing list and into the sold bucket by positioning themselves as being a salesperson for a company that understands what it takes to get this deal done. And if they need information when they go talk to a broker, we've got data, we've got stats, we track everything that moves so we can measure it and manage it. And it's really a matter of the realtor being willing to take a shot at it. I just heard yesterday about a new salesperson in I think he's in Massachusetts, and he'd never done a renovation loan before. He's been here for a couple of months. His first month, he closed a conventional loan and a renovation loan in about the same time.
Yeah, that's great.
His realtor is ecstatic because his realtor didn't think he could get it done.
Right.
He can get it done, and if they can sell that with confidence, then they can talk to any realtor anywhere about moving more houses.
Well, and that's something when you do one like that, that realtor is going to tell other realtors, right? It's like a word of mouth thing that, hey, if they hear about that problem happening, hey, this person was able to close a renovation loan for me. You should go check them out and work with them, right? So it's going to help your loan officers attract more business from realtors because they're doing something that's so niche, right?
Right. Yep. The other thing it does.
Go ahead.
Go ahead.
No, go ahead.
Well, I was going to say, as far as the word of mouth, when I talk to realtors, they tell me 3 reasons they don't want to do renovation loans. 1, they say they never close, or if they close, they take way too long. So we've addressed that by dividing up the work so the loan officer isn't overwhelmed trying to do all this stuff that's not his regular job. We don't want the realtor doing any work. The realtor says it's too much work. We basically want them to open the door and let the borrower in. Every agency that sponsors a renovation loan requires the borrower to select their contractor. So while we think it might be easier for me to have a couple guys to have the borrower pick from, it's actually easier for the borrower to act like a homeowner and go into the market and find their own contractor to do the work they want. And so the realtor doesn't have to do that. They just have to let them in. And then the real reason that it takes too long is because the companies don't have enough expertise and they don't have enough staff to do the work. There's more work involved. You have more butts in the seat to get the stuff done. So our approach at Finance of America is to fully staff our operations to proportionally support our sales force. So right now we're staffed for I think about 100 applications a month that we're ready to close and fund. And right now we're taking in about 35. So I've got lots of room to grow and potential to hire more people. But really it's that combination of knowledge and then staffing to get it done.
All right, so let's go through I'll put you in the spot here a little bit, William. If you're LO out in the field and you hop on you're able to get a phone call with a top realtor in the market, what do you say to them? What's your presentation? What's your value add that you would say to them over the phone to let them understand how you have this operation process in place to get the loans done on time and get them closed? Because all realtors really want is they want their paycheck in a timely manner, right? I mean, the bottom line is they want their paycheck, right?
Right.
So
I would say, would you be interested in I'm interested in working with you. And what I'm offering different than any other lender is a full, go ahead.
I was going to say, would you, it's something I heard last week, and I think it was a really good thing, is if you work with me, I don't want to take business away from the current LO that you're working with, but I want to bring more business to you. Can I work with you on this type of business I'm bringing to you with these Reno loans, right? Something like that.
Yeah, that's kind of where I was trying to get to. That's a really more succinct way to say it.
Yeah.
Because what I'm offering you is business that you don't normally have, and the ability to list and show houses that you normally shy away from or that are harder to move, because we have a mortgage solution which we implement at the front end. And so even though there's lots of companies that do renovation loans, I don't know of any other company that has a whole separate division, operationally fully staffed, to execute and deliver a renovation loan in a manner that is acceptable to you as a realtor and to me as a loan officer. That's what I would tell them. So that'd be my pitch.
I love it though. It's short. It's like a minute, and that's probably going to open the door for more conversation. Right.
And if they want to talk more, then I can show them some process charts or give them some data, some history, or answer their questions. You know, like, they don't do renovation loans. Why don't you do them? Right. And they're going to tell me one of those things. I hate them. I heard they're really hard to do. They never close. They're too much work. They slow me down. Well,
probably had a bad experience. Probably had a bad experience with them, right?
Had a bad experience, or somebody else had a bad experience and they don't want to do it. So we can answer all their objections and engage them in a conversation. And then, you know, then I'd say, if you're a listing agent, or do you list, I find out, do they list or do they just work with buyers? A lot of agents these days work with both. They take listings and they work with buyers. So I'd ask about your listings. Do you have any expired listings that we could co-market together and list them as renovation funds available? And then I'll pre-qualify the buyers and explain the process to them so we can get your stale listings into the sold bucket.
I like that. I like that a lot. Yeah. So what else specifically do the loan officers need to know about this process? I mean, what do you want to tell them?
The loan officers?
Yeah, right. Anyone that's watching.
I think really you just need to understand that the programs are out there. It's a solid FHA loan. Right now we're offering FHA. We'll offer a conventional product later this summer. But the renovation loans are solid 30-year fixed rate mortgages that let you roll in all the costs of your renovation, everything associated with the renovation. So you're not out of pocket anymore, and you're actually saving money because your borrowers are going to spend $10,000 to $20,000. So I would tell the loan officer, ask everybody about a renovation loan. Every customer you pre-qual, everybody you talk to, ask them, are you interested in a renovation loan? Or if you find a house that you like, how are you going to afford fixing it up or changing it or customizing it to making it your home? And they may not all do a renovation loan. In fact, a lot of them won't. But they'll tell somebody else, their friend, their brother, oh, you know what this guy told me? He said I could do this kind of loan that lets me buy the house and roll in the cost of putting a new kitchen in it. Right? And so eventually, as word of mouth spreads, they'll get more business that way.
Absolutely, because we know that a lot of times first-time home buyers haven't been through the process, make a lot of assumptions about their credit, what they can afford, how much they have to down pay, like if they can even find a house in the location they want to live in. So putting this out there for them, or to someone that just doesn't think they'd ever be in that position, well, maybe they're wrong, right? And you start bringing in more new business or more buyers that work with you that would have never, because you didn't have this option available.
Right. So that's really powerful, because in the FHA world, their minimum down payment is 3.5%, which can be a gift. Right. So if you get a gift from your parents to buy your first house, 3.5%, they may pony up 3.5%, but they may not be in a position to pony up another 5 or 10% to remodel the house. So you solve that problem. That says, Mom, I just need, say it's a $200,000 house, I need $7,000. So Mom's going to give me $7,000, and then I'm going to borrow another $30,000 or $40,000 to fix up the house, but it's inside my mortgage. And then so inside my $200,000 mortgage, I've got my $160,000 purchase price and a $40,000 renovation, which includes a new kitchen, updated bathroom, carpets, a front door, maybe some plumbing or electrical upgrades. And you can do a lot, like that.
Well, and we haven't even talked about, on the flip side of doing that, the amount of the equity that builds in that home, and that it's probably worth more at that point when you're done with all that than when you started, right?
Yeah, because we always use an as completed value appraisal. So unlike a regular purchase, your house is usually worth what your contract price is. In the renovation world, we're going to get a value on your house subject to whatever repairs, improvements, upgrades, modernizations you're doing to the house. Typically, over the last 7 years, most people are closing with about 7% equity, which compared to a typical FHA borrower is huge, because usually if you close an FHA loan, you couldn't sell your house tomorrow, the day after you close, and make enough money to make a down payment on your house, because you don't have that much equity. Because even though you've made a 3.5% down payment, you financed your upfront mortgage insurance, which is 1.75 points, so you're down. But if we go to, you're buying it for 160, you're putting 40 in it, and it appraises at 218. It's pretty straightforward that you're in a huge place. If you live in it, it'll just increase. If it increases, if you start high, it's like your salary, right? You're negotiating your salary to start as high as you can so that your bonuses and your raises in coming years are proportionate. It's the same thing with your equity in your house. You start with as much equity as possible, and if the market holds up, you build more equity over time than the other way.
Yeah. So what's the extent of renovation? I mean, how much can be done?
So the extent of renovation, all right. HUD actually says you can tear your house down and rebuild it on the exact same foundation. You can make it bigger, but you can't make it smaller. And that would be a renovation loan. So that's the total extent. So I could take this little ranch, this 1,200 square foot ranch, and gently scrape it off the pad or pick it off the pad so I don't break the foundation, and pour another foundation, another piece, and make it be a 3,600 square foot ranch. And use that as a renovation.
That's wild.
And then depending on where your markets are, it just depends on if the dollars work. Usually material costs mean that HUD's proposition doesn't really work, but it's a really good point of reference. When people say, well, what kind of repairs can you do? I say, well, everything up to tearing it down and rebuilding it. So you can do mold remediation, you can do well and septic, you can put a fence on it, you can do a deck, all the interior stuff, total gut rehab down to the studs, insulation, solar, geothermal well, whatever supported by the appraisal you can do on your property.
Yeah, that's amazing. That's a huge eye opener for a borrower, because knowing that you can find a house that's so terrible and buy it, and then you can do this renovation loan and you can make your own new home. It's all in the eye, right? So it's really that's such a huge benefit. So tell me, William, a little bit more about, I'm trying to look here. I'm looking at some of your slides, but maybe tell me a little bit about some of the deals that you've actually done, and what you've seen, and do you have any like stories or successes or things that you've worked on this year that you can share with the other loan officers that are watching, so they understand really, what this type of program can really do for a new buyer or homeowner or someone moving up?
Yeah, I do. I need to open a spreadsheet so I can get my numbers straight. Let me do that really quickly. But I can tell you some deals that we've closed and what we're working on right now. Because I know a couple of them. I've talked to the borrowers. I talked to a lot of the consumers. For some reason, they wind up talking to me if they have questions. So I'll talk to them and answer their questions.
Well, you know it. You know everything, right? When it comes
I'm the
to
answer guy.
Yeah, totally. So, and guys, again, if you have questions, please jump in, ask questions. William would love to answer them for you.
Okay, so, all right. This one was fun because, I speak Spanish, and this customer, the couple are Hispanic. So I got to talk to them because until I hired somebody else recently, I'm the Spanish-speaking customer service rep in my group. So they did a small purchase. It was they had about $30,000 in rehab. Actually, no, there's looks more like 20. I think they did a kitchen update and repainting and carpet and fixed some plumbing things. So it's the first time they bought a house, and it's a smaller home. I think it's in New Jersey. Their purchase price, this doesn't tell me the purchase price, it would tell me here. Here we go. Yeah, the total rehab was like 26,000. So for 26,000, they got, it doesn't tell me.
Yeah, but I mean that sounds, again, it's great. They get a full updated kitchen, carpet, paint. Make sure all their plumbing's done correctly, or updated. All that within the loan. Yeah.
And it was, I mean, it was nice talking to them. I like talking to them because it actually solves the problem they have when we're working with them.
Right. So how do you market that? You know what I mean? Let's talk about that too. How do you market the fact that, look, what we're doing is actually, we're helping, transform some people's lives because they wouldn't have these options normally.
Yeah, that's, how do you market that? We're going to start marketing by having the people talk to, we do collect testimonies, and we collect through survey means, their quotes and things. I've got a guy in Chicago. He's a bigger purchase. I think his is a duplex, and his purchase is around 240, I think, and he's doing about $80,000 in work on this duplex. And the advantage of the duplex is we use the FHA lending limit for duplex, so we could lend more. There's a single family limit, and then there's a 2, 3, 4 family units. So that's also huge. We allow rental income, the same FHA calculation that HUD allows. We allow on 203K. So this person is buying a duplex in Chicago. And the first time you called us after our back end process is they go from closing to knowing the name of a person who calls them, right? So the customer is supported, which is because it's complicated, it's different. Most people have never done a renovation loan. They don't know anybody that's done one. So we start off with the loan officer setting their expectations, getting their file into underwriting. It gets underwritten. Then they have a conference call with us, and when they identify their contractor, we'll do another call with them and their contractor up front, way in the beginning, so that we don't have problems on the back end. When the loan closes, the closer hands them off to an escrow administrator, who also does a call with the borrower and the contractor to recap what we told them before and make sure they know how they get paid and what the circumstances are that we can release the funds and who to call if they have an issue. So this guy called. The first time he called in. We'd already talked to him a couple times. He was a little upset because he didn't like the door that the contractor had put on his house. He thought he was going to get a fancy door, and he got a plain door. And we just said, well, have you talked to your builder? He said, well, no, I didn't know I could do that. So we said, yeah, just talk to him. Tell him what you were expecting, and then see what happens. And the builder said, no problem. You just said door. I didn't understand which door you wanted. So he swapped the door out. The guy's really happy, and he's there all the time. He's really involved. We wish that we had been able to film his construction because he's such a good customer. He's like TV material, but we didn't know.
Yeah.
But he's having a really good time with this renovation.
Well,
so, most people,
you just brought up a good idea. I mean, you should probably maybe try to identify next time you have a really good, enthusiastic, energetic borrower. That could be a good person to send the video crew out to and do a whole expose about it and use that in marketing for all the loan officers to put out to their to the realtors that they're trying to get in front of, right?
Yeah, it's actually on the docket. I was talking to our marketing guy yesterday, our video guy, because there is someone else in our office who is doing a renovation loan. So we're thinking of inquiring if she's okay if we use her for the process. She works for us. I might renovate my house, and I might be a candidate too. If I wind up making changes to my house, they can film me, and I'll do the before and after and the walkthrough. But it is really powerful when people can see other people's experience, because they see it on TV. They see it on HGTV, like Property Brothers and a couple in Texas. Everybody's favorite shows, and they see that.
Absolutely.
What the shows don't say is where the financing comes from or how they got it done. They just show that they got it done. And then if we do a video, it's probably a little more real because we didn't get it done in 60 minutes. We actually got it done in 7 weeks. There was another deal we just finished here in close to Horsham, Pennsylvania. I met the borrower and her contractor because they weren't really quite getting along, to find out what the deal really was to wrap that one up. And she has a gorgeous house now. She's a single mom with 2 kids. She had about a $40,000 job, and it included windows and a sump pump a new front door, carpet, paint, and I think appliances. And so she got all that done. And it took about 7 weeks, and the contractor was happy. He told her it would take 12. He got it done in 7. And then we just sorted through some personal sort of communication stuff with him so we could pay him, and he's done. And then she's done. She's happy. She's in her house. Her house is beautiful.
Yeah.
It's just
So
like those kind of stories work.
yeah, I mean, and what's great and what I'm hearing is like you're almost in a position as a mediator for the whole process, which again, most mortgage companies out there don't have a separate division like this that's mediating this whole process and going through and taking and making sure that everything's done in a timely manner and done correctly, and that and that it actually gets done. So it's just a huge thing for the loan officers out there, especially with Finance of America, that are that should be taking advantage of this process.
It drives a lot of business to them because if you close a deal for somebody, a regular deal, and I was in LO for about 7 years, and what I noticed was when I finally got my people to the table and we were signing, and I asked them the question, I went to the closing, and if there was anybody else that I could talk to about a mortgage, they might give me 1 or 2 names, sort of kind of begrudgingly, because they weren't really sure. They'd sort of been through this process. They hadn't experienced it. They didn't really know if they could trust me and what was going to happen on the back end. And unfortunately, then I was working for a different lender, and I didn't have as much control over their back end experience as I do now. But I did notice that when I called them after the work was done, 3, 6, 9 months after their closing, and then I asked them if they had any referrals when they're, in their house, on their deck, having a cup of coffee or a glass of wine or something, they would open their Rolodex. And they had so many more referrals because their friends knew, and their friends who didn't know before. Now they know, wow, look what William did. He got it 1 mortgage, and look, he got a house, and they redid his kitchen and put in new carpet and put a little deck on the front, and so just that kind of word of mouth referrals, it really helps to grow your business.
Yeah, and what I'm hearing here is because you are the one coordinating it, the loan officer, you're getting the credit of the work that's done, rather than it being, if someone does it after the fact with just the contractor, then it's the contractor that gets that credit. Instead, it's the loan officers getting the credit for putting this whole thing together and getting it to happen, and they can showcase it off. Of course, like you said, they have the deck or whatever, right?
Right. Yeah, that's pretty powerful for the loan officers because they really are the guy. And the other advantage of the division arrangement we have is that if the deal goes south, or it just kind of blows up anywhere along the process, it really protects the loan officer's reputation because it's my fault. Like we own our stuff. And so if it goes off the rails, I'm picking up the phone to call the broker to tell him what happened, and that it wasn't Joe. There was nothing Joe could have done. Right. And so we can sort of save Joe's relationship with this realtor partner to a certain extent because we own all of the stuff that's supposed to make it a good experience for everybody. And so if it doesn't happen, it's on us. It's not on Joe. Well, even though Joe may have done it, it's still going to be on me.
Right. Well, that's nice to know too. William will take the blame for you guys. Amazing.
Yeah, I'm not going to throw you under the bus. I might call you up and talk to you, but I'm not going to throw you under the bus with your realtor.
Yeah. Might get on you a little bit. Right. So I guess another question is, with the loan officers approaching the realtors, what sales should they be going after, or what types of leads should they be offering to help out with that work well with this renovation process?
So I think if I was out on the street, if I'm talking to a person who predominantly is a listing agent, then I want to talk about your oldest listings, your crappiest properties that you have that are overgrown. You're spending money mowing the grass and the bushes. You had it on your roster. You're the 3rd realtor that's had it. It's been listed for 2 years, or 36 months or whatever. And I'm talking about doing an open house on this property, balloons and a hot dog cart and popcorn. But I got to set it up so that I have at least 2 builders come through and write detailed bids so we can present the people who come to the open house, and maybe with even after pictures that we can do with software that you can present to people who come to the open house of it's a wreck now. It's been abandoned for 2 years, but here's what it could be. And here's a potential bid for what it would cost to do that, right? So that's one thing I try and do with listing agents, is just to move their old properties, because nobody does open houses. They only do open houses on pretty houses.
Right.
And I think that if you could do one on a house that wasn't pretty and get some people interested in buying it, that would go a long way to showing your realtor what you had and what you could offer. So I would do
especially
that.
if you can have like an iPad there at the open house with like a digital, a
Right.
digital example of what it would look like after potentially.
Yeah, and that's easy to do. A couple of years ago, I went to an electronics store, superstore here in Indiana. They had like 38 packages for designing your house. The most expensive one was like $200, but there was a whole bunch in the $10 to $40 range, and you could put your own pictures in there, and you could change the colors, you could move the walls, and they were working on your own pictures. And so those would be really powerful on your iPad or your Surface or whatever, to go in and just show them, here's what it could be. So that's for your listings. If it's a borrower that works predominantly with buyers, especially like some people say they specialize in first-time home buyers. Okay, so let's go through your roster of first-time home buyers, how many you have, and let's have them over sometime in the evening for a light evening meeting, and I will present the renovation scenario to your buyers, and then we'll put them back in the market to go look for a house that could be turned into their home wherever it is. So that's kind of how my approach for those two. And then you have to stay in front of your realtors. It's about a 90-day ramp up, and if you're new to the market for renovation loans. And so when I started, my plan was to pick a 10-mile radius from my house and my office, those overlapping circles. And then once a week, I called on all the realtor offices in those circles that I could get to. And I gave them a flyer. I just talked to them. I showed up. And then after a while, they started calling me when they started having those deals. And then, 6 months later, I got regular relationships with these people, and I'm getting their reno deals and some of their other deals, because you will get their non-reno business if you perform on the hard stuff.
Yeah.
Because you're building a relationship, and if you're able to under promise and over deliver, then it'll solidify your relationship with those realtors. And we try and do that just by telling people the realistic truth of what it takes to get this done.
Absolutely. And what do you think about our approach as well? For loan officers out there to, identifying the realtors that are also, working in property management and looking for renters to be first-time home buyers, which I know a lot of realtors do try to, do both or work with both potential businesses. That's a really good realtor to reach out to too, and be able to go present to, renters that may be interested in doing a first-time buy,
Right. I think that's a really good idea, because if you're paying rent of $800 a month, you could probably own your house in a lot of markets, and so, and then if you buy low because it needs renovations, you get more value out of your deal than just paying rent. If I was a landlord, I like having renters because it pays for my cars and my toys. But if I'm the person paying the rent, it really is better to eventually get into an equity position of owning the home, if they can manage that. So
yeah, absolutely. And I know, with some of the realtors we work with that work in property management as well, they're always, they're doing both on purpose so that they can be the realtor when that first-time home buyer is ready to stop renting and buy. If you can approach them with this process and this value add, you probably can turn a lot more people more quickly into that first-time purchase because of this option.
Right. And I think it also extends the runway, because a lot of renters may be in their lease for a year or whatever. But if you start talking to them at the beginning of their lease, they have several months to think about it. And we know that they shop online for houses about 6 months before they actually call a realtor. So now they're shopping for houses, but with the idea in mind that I can get financing to fix it up. And so they may come across on their own initiative really good bargains in the market, because they know that even though the house is empty, and it needs paint and carpeting and appliances, and the kitchen needs to be remodeled, I know there's a way to do that. And so I can be more proactive calling the realtor because I saw the house, or they may put me on their list, and send me houses. But I understand my buying options. It's a better buying option for a first-time home buyer than a lot of times.
Yeah.
As long as they have the emotional fortitude to go through the renovation. If they don't, if they can't do that, then they should probably try and find a house that's move-in ready. the downside to that is eventually move-in ready still turns into 2,000 here, 4,000 there, 6,000 there, and they're putting it on their credit card, borrowing it from friends. So they're back to the old scenario of hurry up and get in a house and now spend a lot of money to make it your home, instead of take a minute, find the structure, make a plan, close the deal, execute your plan, and then you're living in your home.
Yeah, I love it. Bottom line, guys, if you're watching this, educate yourself in this process, talk to William about this process, and get out there proactively and start talking to all the realtors that you want to be doing business with this value add, because it's going to bring you a lot more business.
Mm-hmm.
Yeah.
So right now, I think the renovation market is $350 billion. That's what the renovation councils are projecting. Americans will spend renovating their houses. That's 350 and then 9 zeros. Billion, okay?
Billion with the B.
Billion with the B. And then the majority of those are not first mortgage renovation loans. The majority are people that either, so there may be some refis, cash out refi, which is really a poor choice compared to a renovation refi, because you get more money with the renovation refi. You get more structure. And when I travel across the country, if I'm wearing branded, logos on my clothes and people ask what I do, and I tell them, for 7 years, I've only had one person, when I told them what I did, say, oh, I did a 203K, or I know somebody that did a 203K. What they usually say is, really? Oh man, I wish I would have known. And everybody's got a story. Either they're in it with their contractor, or their mother is, or they are trying to get this deal done. They've been working on it for years. And I'm saying, yeah, well, if you work with us, we're gonna make sure we're gonna ride herd on all the cats to make sure we get the deal done, because there's a time limit. Like HUD gives me 180 days to get it done. So we'll make sure that like 95% of them are done in a reasonable time. So and if there's a conflict, like you said earlier, with the borrower and their contractor, well, here's the guy holding the money. So we're gonna mediate this, and we're gonna make sure everybody gets paid, and we're gonna resolve it. So, there's more structure than just me getting a HELOC and then going and becoming a general contractor in essence, so I can remodel my house. Yeah. And you get more money, because I'm always using the as completed value for my bottom line maximum loan amount, whereas your HELOC is going to be 80% of your as is value.
Right. So and then it's all under one loan. That's a 30-year fix, right? Usually.
Yes, 30-year fix, and so.
Which is a huge difference than a HELOC. So
there's no payoff penalty. And what people never realize is that FHA loans are assumable. So we expect the rate to go up. So here I bought my house for $200 was my mortgage. It appraised at $218. I'm living in it for 6 years. My rate is 3.375. The street rate 6 years from now is 5.5 or 6, right? And I'm going to go sell my house. Guess what? Not only do I have more equity, I have a rate that I can pass off to the next borrower that's 3 points lower than market rate. Okay? Wow. I'm in a really, really good position to sell my house and get what I need to get out of it. So FHA loans are assumable, which means that your 203K is assumable. Which means
oh my God, there's so many benefits. There's so many benefits. Freaking out.
Buy it now, plan to sell it. Just watch the rates. Maybe you're not planning on moving, but maybe you're thinking, man, rates on the street are 7 and I'm at 3 3/4. What can I get for 3 points? Maybe I'll sell my house, right? And
so much value proposition that the loan officers can be talking about, not only with the borrowers, but with their real estate agents. I mean, every person that works Finance of America should be watching this video after it's done.
I would think so, but they're busy because it's a seller's market right now. Like the rates are so low, everybody's slammed. But yeah, there's some guys selling them. We're starting to get some guys I got one guy's got 5 in the pipe right now.
Oh, that's great.
Got 3 or 4. So people are starting to realize that you can use it really to drive your business. And because we're doing all the back office heavy lifting, you can just drop it off with us after you disclose, and we'll update you as you need to be brought into the loop, and keep you in the loop. So you don't have to be managing contractor dispute. They sent the wrong document. They didn't sign it, right? The borrower's not calling you. They're calling my project manager processor, who's going to answer the borrower's questions. So really, the bottom line for why I started doing this when I started 7 years ago at a different company is we want salespeople to be generating new business.
Right.
So you can't bog them down with a high margin product even if it's a high margin product. You can't bog them down so that that's all they do. When I was in LO, I had like a couple days a week. I didn't do any new business. I just went to work and I shuffled papers and I looked at bids and I did all this stuff that most loan officers can't do. I could because my background was different, because I came to this a little later from different experiences. So that's what we do. We took that heavy lifting off your plate so you can get the core features of the product, understand the product, the differences, be able to calculate a draft of a loan amount, because we're just working on numbers, tell your borrower the process, what to expect, hand them off to us, and then get on the street, generate new business. And
Yeah,
you know,
I love it. I love it. I think, William, is there anything else that you feel like we haven't covered that we should jump into, before we tell people watching what to do to get in touch with you, obviously, and to get the education they need to be presenting this stuff to the realtors and their borrowers?
I think we've pretty much covered, the high level of everything. The biggest thing to remember is that renovation loans make your whole transaction, well, not the whole thing, but it suddenly becomes about the location. Where do you want to live?
Yeah.
Are there any structures in that area? Pick a park. You want to face this park? Any houses there facing that park that you want to be in? What's their condition? If we can get into it inside your qualified mortgage amount, then write your offer. So that's really the biggest thing I tell borrowers and realtors is focus on, how much you can spend. So now where do you want to live? And see if you can put those two things together rather than trying to find the ideal house. Let's find the home that has good bones and make it be the house has good bones and make it be your ideal home by renovating it. That's really powerful.
Yeah, absolutely. And it's just, you're doing your realtors a disservice, you're doing the borrowers a disservice if you're not talking about this option, because it's just, there's so many benefits to it.
Mm-hmm.
So, William, if someone, watching right now, for whatever reason, they haven't heard about this, which they should have if they're working with you guys, but if they're a realtor watching or someone that, how do they get in touch with you? What's the best way?
So they can call me at 800-355-5626. My extension is 2331. I answer the phone. So if I don't answer, I'll call you back. Or you can send an email to wbrown@financeofamerica.com, and I will be happy to call you back or work with you. If you are a realtor and you wanted to present this to your whole office or your realtor group or your masterminds group or something, just give me a call. We can maybe set that up either via webinar or depending on where you are, I might show up and explain it to people and just help you get out there and do more business.
Awesome. Well, I'd like to thank you, William. Thank you so much for your time today and going through this again with everyone that's watching. And we'll put some notes on the Google Plus page so you can contact William directly. And if anyone out there wants to learn more about viral marketing and how we help Finance of America and how we help mortgage professionals get in front of more realtors with marketing, reach out to me, Scott, at GetViral, GETVY as in yellow, RAL.com, and I can be more than happy to talk to you about that. William, thank you again so much.
Thanks again for having me, Scott. I appreciate it. Thanks, everybody. Have a good afternoon.